that where we are, global macro, and people talk about the everything bubble. I think if that turns and the everything bubble pops, and the last time was 2008, before that was 2001, the dot-com crash, then everything will be stress tested. And I'm not saying just Bitcoin and crypto, I mean world financial markets. Liquidity is going to pull out of the system, buy-sided liquidity. No one will want to buy. They want to run to safety. It's called a flight to safety. Everyone runs to the US dollar, and then gold afterwards. You can see gold starting to rip, right? That's telling you warning bells on the economy.
Every few decades, the global financial system reaches a breaking point, a moment when every asset class, every currency, and every investor is tested. The question isn't if it will happen again, but when. According to on-chain analyst and market expert Willy Woo, we may now be approaching another such stress test, one capable of shaking not just crypto, but the entire global economy. Wu warns that the so-called everything bubble, inflated by years of easy money and speculative excess, is nearing its tipping point. When it bursts, it won't just impact overvalued stocks or fragile altcoins, it will send shockwaves through the entire liquidity system, draining capital from risk assets as investors flee to safety. Historically, that safety begins with the US dollar and then gold. Wu notes that gold's recent breakout may be the market's early warning that something much larger is on the horizon. But this isn't just another crypto crash scenario. Wu describes a full-cycle reckoning, a moment when Bitcoin will be tested not merely as a speculative instrument, but as a true monetary asset. The question becomes whether Bitcoin behaves like the Nasdaq, volatile and speculative, or like gold, a store of value. For investors paying attention, this could become the defining macro story of the coming years. In this video, we'll dive into Wu's latest analysis on Bitcoin's role in the global business cycle, his warnings about institutional risk-taking, and what the next liquidity crunch could mean for the entire crypto ecosystem. This isn't theory, it's a glimpse at how the system may shift under pressure, and why Bitcoin's resilience could define the next era of finance.
And the interesting thing is most people get shaken out on the surface level. 10th of October, Trump tweets, nasty things about tariffs to China, and all the capital markets crash. It was on a Friday. Some of it vented out, risk off into crypto because it's 24/7. Nailed all the altcoins and shitcoins. Bitcoin held up, but it was pretty. But that was just liquidations. That was like
was it $19 billion in a single 24-hour period?
Yeah, something.
The highest monetary value for any liquidation period.
Yeah, more than ever. FTX, more than ever. It was the number one. I've heard 1922, something like that, billion. Mainly in altcoins, not Bitcoin. It did sweep some of that, but mostly it was altcoins because the liquidity wasn't there. But that was all traders playing trader games. And it was not the hodlers in cold storage. I messaged Max Kai, DebiFi, so how many of your borrowers, these guys that are borrowing fiat, you fronting Bitcoin collateral, how many of them got into liquidation? I said, none. It was just another day, it didn't affect the long-term holding, but we can be shaken out by fear of the sort of short-term stuff.
Do you think that's extremely bullish for Bitcoin that yet again we've had a huge market reckoning? Alts did what shitcoins do, got completely wrecked, and meanwhile Bitcoin's virtually recovered.
I think so. I mean, the institutions are coming now, right? And it's important they see this. Like, I don't think institutions understand that altcoins are technology. They're like your startup that one day hopes to be on the NASDAQ. And on the other side, you have a monetary asset that's going for the size of the world economy. These are two different things.
Well, we see some of them now dabbling in the so-called treasury companies of these alts. And it's astounding to me that they're actually getting up.
Yeah, because
trying to replicate the same model.
It's because they're all in for the short-term trade. Like, if you're going to be approached to allocate capital into this whatever DAT, and they have a PIPE, which is the private placement opportunity. You go to all the crypto investors, oh, this is like 2017. I can like front some money and then wait a bit of time and my tokens unlock, my regulated US securities get sent to me, fully legal, and then I can dump them onto a liquid market. And so I think that the DATs are really very short-term time frame people playing this market in a bull, playing chicken with a freight train. If a bear market hits, you're going to get killed, and everyone who's investing in it knows it. And so that's why they're getting filled. It's from the crypto investors that played the same game that's been played since 2017. The liquidation price keeps changing because in Metaplanet, they take on a debt, right? Like
they don't have much debt.
Not at the moment, but the thing is, their structure is that if they don't have debt near the top of the market, then they're good. So it's very much how much risk they take. You're really trusting the operational team, who are pretty sophisticated, to play this well. But they've taken a couple of tranches of 300 million. Instantly, you have liquidation issues. If the market turns on them and they can't do their synthetic ATM, basically re-transport capital back into Metaplanet to pay off the debt as people are buying the shares, if the market turns, that whole synthetic ATM machine stops and they're holding the debt and they will be partially liquidated. And if that happens, then there's some liquidation. Yeah. And the question is, there's no guidance on when the next tranche of debt will be. It went relatively small, then it went 300 million. It was a big risk. They were right on that. It wasn't, the market hadn't turned. So every single treasury company has different details, and you need to look into it and see how does that work in a stress test. And I think Metaplanet are quite sophisticated. I saw them by the bottom of the dip and unload that 300 million, and that actually turned around that particular dip a few months back. I haven't had time to look at everything. I've just looked at a few, and each one has different risks. And these digital asset ones with altcoins in it, I haven't looked at them. Maybe they're robust. Maybe they can sell, hedge, whatever. But will they be able to do it? Are they going to do it? So let's see what happens. No one really, at least only a few people saw some of the what happened in 2022 as everything unraveled. Right now, everyone thinks that the system's robust, but I think that we'll have another bear market, and if we get a stress test, let's see what breaks.
As Wu explains, the October 10th sell-off perfectly illustrated what happens when macro fear hits the digital asset market. A few provocative tariff tweets from Trump sent global markets tumbling, and because crypto trades 24/7, it immediately became the outlet for risk-off behavior. Nearly $19 billion in positions were liquidated in a single day, most of them in altcoins. Yet through the chaos, Bitcoin held up relatively well. Short-term traders were wiped out, but long-term holders, those who truly understand what they own, didn't flinch. Wu emphasizes that this is the signal institutions need to see. He compares altcoins to startups, experimental projects hoping to mature into something meaningful. Bitcoin, on the other hand, is the monetary network itself, the base layer asset designed to rival the global economy in scale. Yet many investors, even at the institutional level, continue to chase short-term profits, treating high-leverage token plays like lottery ticket. Wu warns that when the next severe market downturn hits, that leverage will collapse, leaving only the strongest assets standing. And that's where the next phase of his analysis begins, the ultimate stress test for Bitcoin itself. It's a moment to see whether it can withstand systemic shocks and prove its value not just as an asset, but as a foundation for the digital monetary system.
I think that where we are in global macro, and people talk about the everything bubble. Mm-hmm. I think if that turns and the everything bubble pops, and the last time was 2008, before that was 2001, the dot-com crash, then everything will be stress tested. And I'm not saying just Bitcoin and crypto, I mean world financial markets. Liquidity is going to pull out of the system, buy-sided liquidity. No one will want to buy. They want to run to safety. It's called a flight to safety. Everyone runs to the US dollar. and then gold afterwards. You can see gold starting to rip, right? That's telling you warning bells on the economy.
It's been happening for almost 3 years now. So gold and Bitcoin bottomed around about the same time. I think gold may have preceded the Bitcoin bounce. Maybe they happened at the same time. I can't quite remember. But they've been rising.
Yeah, because like gold's and it's in a divergence, and very seldom. It's a very, very, very seldom you see this kind of divergence with gold and the rest of the economy. And last time was the year 2000, before the dot-com crash. Before that was 1971, the stress test that created fiat. And before that was 1929.
So we're now seeing long lines of people outside of gold dealerships, or whatever they're called, to buy gold bullion.
Yeah.
Is that a top sign or signal? Because
I
we're
think
suddenly seeing quite a pullback, right?
Yeah, I think gold's going to cave as well, like it does in a flight to safety. If we have any structural sort of breaking of the TradFi markets, it'll be like 2008, a little bit like that, a bit like 2001. Well, 1929, well, I don't think it'll be 1920. 1929 was the Great Depression, everybody. Right, the markets are quite different now, but that's what gold's telling you if you're a gold trader. So,
do you think gold will be impervious to?
No, it'll pull back. It'll pull back. Gold. I got my ass handed to me in 2008. I was long to the gills gold. It was the right bet, but you forget that when the whole thing unravels, everyone runs to the US dollar. They sell everything, unwind all their positions. It's called deleveraging. Dollar goes to the roof, in relative, the Dixie goes to the roof. Gold strength relative to other markets. Dollar strength relative to other markets go through the roof, meaning that you can buy more with your dollar. And then, gold was the first to recover, and it went on all the way out to 2000 to the 3 to 4 year perpetual bull market. So, gold is the right asset in this time. And we want to see how Bitcoin performs. It's a really good test because now we've got institutions here and we've got global macro investors and traders in there. How does it perform? Is it going to perform like the NASDAQ or will it perform like gold? Because we say it's got the properties of gold. In my opinion, it's got more. It's what gold wanted to be. But it takes time, 16 years is not long enough. Well, I just see Bitcoin as going into a normal standard bear market. Like everyone thinks it's strong, and it is. And the investors are strong, like institutional, MicroStrategy, these types of companies are holding it. So there's strength there. But if we get a pop in the global asset bubble, then that impact will pull it down, and that maybe we get a 80% drawdown like last time, and it's like just another 4-year cycle from the view of being inside Bitcoin. But from the view outside, it's a totally different thing. Look, it just did its normal thing against a stress test. So
80% from these levels would be catastrophic on the charts, though, right?
For the holds above 16,000, the bottom of the next bear market is structurally intact because it's higher than the last bear market. And we shouldn't look at tops either. Tops are very unstable. The bottoms are very much closer to the fundamental investors. Generally, it doesn't drop below 20% of the capital stored in the network. It's very close. The tops are sometimes 3 to 5 times more than the capital in the network. So the bottoms and how that performs, if it drops below 16,000, then that'd be a little bit freaky, but that can happen. It can rebound. I talked about 3 cycles.
Okay, I missed that.
There's a halvening cycle, which is we all know the halvening, the supply shock. There's a 4-year liquidity cycle, which is central banks printing money on a 4-year cycle. And so that's been Bitcoin for 16 years. And then the last cycle was the business cycle. And Bitcoin was invented off the back of 2008 world financial crisis, which was the last ending of the last cycle. And those are the 3. And we've never seen the business cycle. And this is what I'm alluding to in this conversation.
Where do you think we are in the business cycle?
On the verge.
On the verge of breaking down?
Yeah.
Interesting. Okay.
The economic indicators have fired. Henrik Zeberg does a lot of this work, and I've seen his data and his signals, and it's very compelling. It's not just one; it's key macro indicators that all point to this. So the question is when, not if. And this was very clear to investors in 2007 as well. The indicators were clear. Gold was starting to rise. The numbers were looking bad. People were starting to put positions on banks. It wasn't a surprise, actually, to a lot of investors. It took the rest of the world by storm because everyone was sleeping at the wheel. The whole thing was over-leveraged.
In Wu's view, the macro landscape is nearing a breaking point. The last major, everything bubble bursts occurred in 2001 and 2008, and each time, global liquidity evaporated as investors rushed to safety. Wu believes the cycle is repeating, and when it does, every asset, equities, commodities, and Bitcoin will be tested. Liquidity drains from risk assets, with the US dollar traditionally acting as the first safe haven. Once the panic subsides, gold typically recovers first, signaling the start of a new era for real asset. Wu notes that gold and Bitcoin have been rising in tandem since 2022, a rare divergence from broader economic trends that historically precedes major financial shift. Gold rallies first, reflecting systemic stress, before correcting as the flight to safety begins. Later, as central banks reflate, sound assets lead the recovery. The key question now is whether Bitcoin will behave like gold or tech stock. Wu argues Bitcoin shares gold's core properties, it's portable, transparent, and scarce by design, but being just 16 years old, this will be its first true test during a global deleveraging event. If Wu is correct, the coming years could define Bitcoin's identity. A severe macro downturn might trigger another 80% correction from the highs, painful but structurally normal within its 4-year cycle. Yet even then, Bitcoin's fundamentals remain intact, supported by a growing base of long-term holders and institutional investors who understand its purpose. Should the global bubble burst, it could serve as Bitcoin's ultimate trial and greatest validation. For informed investors, this moment isn't just about price, it's about positioning for the next monetary era. As Wu puts it, we're on the brink of a full-scale stress test for the entire financial system, and those who understand capital flows, liquidity cycles, and Bitcoin's role will see what's coming before the rest of the world does. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.